and the virtual trading floor. If someone's able to copy the link into the VTF chat, I would appreciate it, and then we can get started. All right. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Here is my position disclosure. Couple small changes, I guess, since Thursday's afternoon meeting. I got out of Apple on Friday. I got out of AMC short on Friday. Let's talk about markets. All right. Yeah, so brutal little sell-off there into the close, brought on by those sell imbalances. Let's start with our indices like we always do. Thank you, Mike. So another volatile day on Wall Street. The S&P is down 0.9%. The Nasdaq is down 1.5%. The Russell is down 1.3, 1.4%. So yeah, definitely another weak day. I had no conviction on this market coming into today's trading session. And I think I kind of made that message clear in our morning meeting today, that I thought it was going to be a less is more type of trading day. And for the most part, it was a really difficult day. I almost can't find anything that paid really well. I mean, there were some of the one-offs that we spoke about in the morning meeting today that paid okay, like a GoPro. Oh, wow, I didn't even see this close in GoPro. Like this, this opening drive in this GoPro, which I guess totally failed. But I didn't really even have too much conviction in this one. I like the upgrade, but I don't like the company. I don't like GoPro as a company. We spoke about maybe this task through 45, which also got upgraded. And look, here's another one. Tried to be strong in the beginning of the day. Built this flag, tried to continue, and then also failed. This stock was a little bit too thin, I felt, though. So we kind of saw that during the trading session today. So a bunch of things, like FLR, I know Big Z brought up in our morning meeting today, but it never triggered, so you never got into it. KBH, this one, actually I thought gapped up too much to be able to be viable, and they just wrecked this thing back down. Look at that. Oh my God. Totally crushed that. So again, really hard day, and even before we got weak into the afternoon session, like the opening session was kind of really sloppy and weak. So I really don't think that there was very much at all to do with the market today. That was kind of the main theme I was trying to discuss with you guys in the morning meeting. The last thing I specifically said was my usual, make sure everybody manages their risk, but don't overtrade. Don't overtrade today. There's not going to be a lot to do. So just a very hard trading session today. I guess some of the more interesting things, well, let's take a quick look at the other indices. Actually, let's take a close look at the daily picture of the SPYs, and then we'll look at the other indices. SPYs are still fine overall. Friday was an all-time high close, which... Oh, and I found that chart that I was talking about in the morning meeting today. So in the morning meeting, for anybody who wasn't there, I spoke about how I saw this chart, and I wasn't sure if it was the S&P or the New York Stock Exchange or what it was. It turns out it was the Nasdaq. But the chart basically showed where the market was, which Nasdaq's almost at all-time highs, S&P was all-time highs on a closing basis on Friday. And at the same time as where this market is, the Nasdaq has more stocks that are making 52-week lows right now than at any other time since March 2020. So it's just another statistic to add on to what we already know, what we've already been talking about, which is that the market recently has not been a strong representative of what the average stock has been doing. And the average stocks are just, there's a lot of stocks out there that are just bruised and battered and destroyed, and there's a handful that continue to hold up, and their market caps are so big that they save the market. But anyway, SPYs here with a weak day. Ideally you would want to see your SPYs closing above 470 and staying above 470 after Friday's all-time high close. But it's not the end of the world for them to pull back. They haven't even pulled back fully to the 80 MA on the daily chart yet. This is still technically a bullish consolidation. We'll see whether or not the SPYs are able to hold this bullish consolidation, because when you look at the Nasdaq is a little bit more concerning. Nasdaq $400 resistance has been huge. I was continuously shorting T-triple-Qs into QQQ 400 for like 3 days in a row. It paid me really well, and I actually did not do it with, I didn't add back to my T-triple-Q position today. So at this point I have a small position. I was pretty heavy a couple of days ago, and maybe it was a mistake that I didn't stay aggressive with that T-triple-Q into the Nasdaq resistance, because it was also acting as a hedge for some of the longs that I have on. But like Rich pointed out, if my game plan said not to reload, then the most important thing is to follow your game plan, and that's what you rely on for long-term return. So I did not reshort T-triple-Q today, even though I still do have a little bit. And this closed bad. This closed kind of below support, just below the moving averages, and slightly into this gap from, was that Friday to Monday last week? Monday, Tuesday, Wednesday, Thursday. No, I guess that was Monday to Tuesday last week. So Q's here are basically into a gap, and that gap extends down to 388. And that was with Apple being so weak. I'll talk about Apple in a second. I'll look at the IWM first. Because as the Qs were getting weak, particularly brought on by Apple today, the IWM was very weak early, but was catching a nice bid into the afternoon, and it looked like he was going to have an interesting tail here, because that tail still would have been higher than these lows from late November, early December, and this is also with the IWM actually having gone ex-dividend today, so it's actually price-wise like a little higher than it actually is by maybe 75 cents or so, or whatever the dividend was. But this actually looked to me like it was ready to give a good-looking tail today, as the SPYs are still kind of intact, and then we had this dramatic sell-off kind of brought on by MOCs, particularly MOCs from Apple, into the close. I think the initial indications that we were getting from Josh around 3:30 or so was that MOCs were like $1 billion to buy, and that's solid. I find anything to be $1 billion, I find that anything that is $1 billion or more to buy or sell tends to be market moving. And then at 350, when the Nasdaq MOCs come out on top of it, it was like what, 2.2 billion to sell. That's a big number, and it's a big flip. It's an even bigger flip. Market's anticipating that we're getting a solid MOC buy coming in of $1 billion to all of a sudden at 350, it is 2.2 billion to sell. And again, a lot of that was brought on by Apple. Take a look at Apple in a second. But that really kind of caused the IWM, which didn't go down as much here as the SPYs and the Qs in the last 15 minutes. It caused it to close weak enough, though, that the Russell here is not giving a big enough of a tail for me to get excited that we could begin to see a bounce back in this. And let's look at these 5 minutes of the SPYs really quick, and then I'll look at Apple. You can tell here that this MOC really whacked these SPYs down in this last 15 minutes. Really whacked this Nasdaq down here in the last 15 minutes. And Apple, I saw, had a million share sell imbalance initially come in, which is a lot. And it traded down pretty hard on that. Let's take a look at this Apple. So in some respects, it almost seems like Apple has been saving the market on a day-to-day basis, and Apple was not able to save the market today. And today, it actually almost seemed like the market itself, to me, especially into the close, wanted to be a little bit stronger than it actually was, and couldn't because of Apple. So it's just so interesting kind of how market caps work with the S&P and everything, because to me it was just mind-blowing that on Friday we could get an S&P all-time high close, that the Nasdaq looks just fine, when I know that most stocks are not doing well. And again, that's confirmed by that chart that I saw over the weekend that showed that Nasdaq stocks at 52-week lows are at highs since March 2020. Apple, though, while that's happening, had basically gone parabolic to the upside. I mean, this move in Apple, I really thought we were going to see 183 in Apple today, because I think 183, is it 183 or 185? I'm forgetting now. It's one of those price points where Apple is a $3 trillion company. So I kind of thought that we were going to see that $3 trillion headline hit before Apple pulls back. But the degree to which Apple was moving higher, and I was saying this on Friday, that's when I exited my long position in Apple, The degree to which Apple was moving higher is becoming unsustainable. And it was like insane. It's just adding on billions of dollars of market cap literally every day. Like every day last week, Apple's worth billions of dollars more than it was the previous day. It's just nuts. And don't get me wrong, I'm an Apple bull. It's a fantastic company. It's a cash generating machine. I use Apple products. I'm an iPhone person. But the rate of ascent in this Apple was ridiculous. And it was just, it's a fear trade. The fear trades have still been strong. I'll tell you one of the other strongest stocks in the market right now, good old Proctor and Gamble. Good old Proctor and Gamble has been crushing the game. Even today, PG up a percentage point. This breakout through this 150, an $8 move in PG in 5 days. I mean, this is just not how this stock moves, right? But, when the market's worried, what does it go for? Toilet paper. Toilet paper and shaving cream, right? Maybe some soap. The things that you still kind of need no matter what. So, PG here on fire. Apple also honestly being viewed as a safety trade at this point, on fire. But look where the ADMA is on Apple. It's at 172. Stock was at 182. Extended the upside by $10 in this thing. Like Felipe said, this thing could easily pull back to 170 and still be healthy and fine and bullish. So it had a decent looking pullback today. It didn't actually hurt the indices, I think, too bad. But it gave us a really weak close. Especially when that kind of sell imbalance came in on Apple, and I think it got even more negatively impacted. A little bit of bad news came out on what was it, some sort of labor dispute or something like that. Regulators are viewing something with their labor practices. I don't think that's too big of a deal for Apple, but it was just kind of one extra thing to throw in there. So this is not a big deal, right? This is the same thing we were saying back here, and it's the same thing we were saying here, right? Apple got really extended on November 22nd. And guess what? It had a healthy technical pullback to the space between the 8 and 21 EMA, and then it made a higher high. And then guess what? It was extended again here on December 1st. And guess what? It had a healthy technical pullback to just about the 21 EMA on the daily chart, and then gave this even bigger, more incredible run. And it's the same thing. It's just this is how stocks work. They become extended and they correct. But the interesting part to me is Apple's effect on the market, because it seems like Apple, and I know Microsoft had a big day recently as well, I think on Friday, were the biggest things in some ways. And Google obviously still looks fine also. Amazon is maybe not as great. Facebook was having a big morning this morning and then rolled over a little bit. It really seems like these mega cap companies are the reason why the S&P is at all-time highs right as of yesterday, and that the Nasdaq was holding up, but the Russell, which I think gives us a better indication of the average stock that's out there, was in a market correction. So the big question that you can't count on this at all, but I keep saying this: is there any universe where Apple can sell off, but the average stock actually holds up? Where Apple comes down to earth a little bit and the IWM catches a bid, or at least goes sideways as other things are selling off? So far, the answer to that question has been absolutely not. So far, the answer to that question has been absolutely not. It's like, if Apple and the Nasdaq are really strong, then maybe the IWM and those other companies are able to catch a bid. But on other days, Apple and the Qs can be really strong, and your average stock is getting smoked. And it seems like whenever, recently at least the last 6 months, I feel like whenever we are seeing Apple and Nasdaq sell off, then the Russell and the average company are also getting obliterated along with it, and they sell everything. So that's been the big question for me for months, actually. Is there any realm in which these stocks like Apple can actually stop going up, maybe even pull back, and we see your average company or we see the IWM go sideways? And it is not something that anyone should count on, because we've not seen that happen at all. So you just can't count on it. And maybe that changes at some point, but there's no indication that it will. But it's just still so crazy to me to see some of the prices that some of these stocks are trading at, whether it's Alibaba. We can look at very different things. Alibaba, Viacom, Peloton, or like a Teladoc, or like a Zillow. All like kind of pretty different companies, especially if you're comparing like, Viacom to some of these other stocks, and then Alibaba, obviously, in its own kind of unique world with the Chinese risks that are out there. Even though I'm a fan of the company, all these other things have been just totally taken to the woodshed. And it's also interesting to see, though, we saw a strong balance in some spec names early last week, and now some of them, though, are potentially making decent higher lows. This Alibaba is interesting to me. This is a potentially decent-looking higher low compared to earlier in the month. Others are kind of more making equal lows, and others, like a SoFi, made lower lows. UPST made lower lows. So some interesting relative strength, relative weakness dynamics to look at there. I actually think this Peloton had an okay day today, even though it's right back into the ADMA. It showed good strength. It's up a decent percentage. Good volume came in. It closed at the ADMA. I think Peloton at $41 is insanely cheap, honestly. And honestly, I think that somebody should come in and buy them. But I think that the only reason, I was thinking about this over the weekend, I think the only reason that some of these companies that are acquisition targets are not getting bought out is because the people who would be doing the acquiring are too afraid of antitrust regulation right now. The FANG stocks, in case people haven't noticed, have really stopped buying other companies, and it's entirely because they're afraid of getting accused of monopolistic behavior and just getting bigger and bigger and bigger and bigger, so they can't. So instead, they just have to build internally. Instead, they just take their cash hoards and build the product that they want internally instead of buying it from somewhere else. I see Shane here posting a chart. I just want to take a quick look at it. If you can see the above, this is the top holdings of the Qs as of the close on Friday. The top 8 symbols are 52% of the QQQ. Apple, Microsoft, Amazon, Tesla, Nvidia, Google, Facebook. Right after that, you got Adobe and Netflix. I just want to read that statistic again. The top 8 symbols are 52% of the QQQ. And even for those Nasdaq stocks that are at 52-week lows, is there any universe in which the Nasdaq stocks that are at 52-week lows can have a bid while Apple actually sees selling? And so far the answer to that has been no. But it's just crazy to see the differences in price. All right, so that's really all I got. QQQE is the equal weight. Huh. Wow, what percentage is QQQE off from its highs? High is $90. Today's close is 83 and change. So it's down $7 in down. So it's almost in market correction territory, right? Getting there. And definitely almost at the 200 day. So you look at this equal weighted QQQ versus this actual QQQ, and it's a pretty solid difference.
8.5% down.
Yeah, 8.5% down. All right, that's all I got. Happy to take a look at what you guys got. Can ARK implode? I guess in theory it could. It doesn't look like ARK has seen actually supermassive outflows recently, which is interesting because usually that's what people do. When it comes to investing in like funds and stuff like that, investors who buy these ETFs are just like as if they're buying stocks, tend to buy at highs and sell at lows. There's all these like end of the world market products that you can be involved in that underperform every single year because they're supposed to underperform every single year. They're like an insurance policy on your account, so it's supposed to underperform. It's only supposed to go up if the market gets destroyed. So what tends to happen is right after a really big bear market, a ton of money will plow right into any of those products that are designed as end of the world safety trades, And then when the end of the world doesn't happen because it already happened, then money starts to slowly come out of those until it happens again, and then all the investors, basically rush back in at the top, or in this case at the bottom. So can ARK implode? I don't know, but she's certainly not having good performance. So we'll see. Jerry saying Pfizer was a good call out today. Yes, it was. Pfizer was a good call out. This was brought up in the morning meeting. I don't remember by who. Had a nice little break, like kind of breakaway gap here above $53. And then I know we called out this great looking bull flag here today at 9:45. So that was a really good looking trade. This ADMA catching up to the base of the flag, and then you get in your continuation. So I feel like this is like the only good looking trade in the entire day. And I know guys were trying and looking at the Apple short. If you caught that was a really good trade too. But I said it like 4 times. I want nothing to do with this trade. I don't want to short Apple when it's extended. I want to buy Apple when it's no longer extended. I want to buy dips in Apple and not try to short tops in Apple. But we knew it was very extended. Even with that, look how hard this trade was. Breaking this opening high at 10.10 and then rolling over. Good luck trying to catch this. And then there's no signal to short up here at all. There's no higher volume on the high of the day. I guess it's a little bit of a shooting star candle, and it's extended on multiple time frames for this time of day especially. But this is so hard to try to catch this Apple here. I know a couple of you guys were trying to go for it, so I hope somebody caught it. Yeah, Sebastian, I can check out Snow. Snow was another one of the trades that was on the radar for today that failed. I actually looked at the Snow myself, doing my own research, and I liked it, but I didn't put it on my list for stocks to communicate in the morning meeting today to the team, or for my own list to trade, just because I think that the stock is difficult. And that was the extent of my thought process. I was like, I kind of really like this Snow here for this break of this 375 area, but I don't think I'm going to put it on my list. I bet it's kind of a tough name to trade from my previous experience. I've traded this in the past where I've been right and have lost money. Which is always frustrating to me. Like, I want to lose money because I'm wrong, and that's really what I focus on. But so it's a little bit of a tough stock to trade. But then I think Big Z brought it up in the morning meeting. Big Z and the team here brought it up in the morning meeting, and we spoke about it. It looked really good. And I think he was involved in the trade here initially to the long side. It broke. It looked good. It pulled back to the moving averages. Okay, fine, and tried to go again, and then it just totally failed here. So I really liked it also. So you really liked the daily chart on Friday. You tried the inside day breakout, but it failed. Okay, the inside day break, but it failed on that level. And the market was also really weak on Friday, right? Oh no, it's the day SPYs closed at all-time highs. IWM was really weak on Friday as the SPYs closed at all-time highs. Yeah, so I just read the rest of your question. Can I check your ideas and tell you if maybe you were wrong? I don't think you were wrong at all. It's exactly like I said. I really like this for myself. I took it off my radar, and I didn't put it on my list, I should say, because I think that this is a difficult name to trade, and that was the extent of my thought process. But I did like it. Big Z, who's on the team here, who's a really good trader, he brought it up. He also did like it, so then we spoke about it. So there was a lot to like about this thing. I think it's just a difficult stock to trade, and especially if the entire market is failing, it doesn't matter how good your trade is. The entire market's failing. This is failing too. So I think it's the right idea. Stan asking about CL. Ooh, beautiful. Yeah. Oh, you're talking about, you brought this up because I brought up PG. Yeah. CL here up 2%. Yep. Toothpaste, toilet paper. That's what people are looking for right now. Utz. I forgot this was a public company. This thing's up 6.5% today and had a breakout through 16 resistance. This is nuts. Looks like it's a pretty low volume stock. I don't know if I've ever traded this name before. I've definitely typed it up before. But yeah, really strong move in Utz today. Utilities are also showing signs of strength. This is from Steve. Yeah, XLU had a big day today. XLU up 1.2% today. So also indicates a risk-off environment. Absolutely. Nervous is why there's new soft and dry. Blast from the past from the 1970s from Rich. From Cody here, are there ever any times where you take like an extended time away from trading, whether it be market conditions, psychology, or continuous red days? No, I don't. Whether or not I should is a totally different question. There's definitely been periods of time when I've kind of wanted to. I think going on vacation is a really good thing. My problem is even when I go on vacation, I usually trade every day. I'll only trade the morning. Unless it's a hectic day, then I end up not taking the vacation day at all, and I end up trading the whole day. So yeah, I think it's okay, but the flip side to that is you don't get better by being away from the market, and if anything, you lose your feel a little bit. I don't like that term, but I know for myself, like when I do go, even when I go on a vacation, I still trade the open every day. I still come back after a week or 2 weeks or whatever it is, feeling out of touch with the market, and it takes some time for me to get back. So the point is that you don't make the improvements that you need if you're struggling a little bit. You don't make the improvements that you need to make by not being in front of the market. I think that the best thing to do is to really trade and study markets, but have very, very tight risk limits if you're struggling a little bit. And there's plenty of reasons to be struggling right now. This market environment, honestly, since the summer, with a few pockets of good trading, for the most part, this market environment this summer has been like one of the more difficult environments I feel like I can remember. Again, we had a couple good pockets there. That first half of November was like really solid. There was some really good trading going on here. Second half of October, first half of November, like that month period of time was really good. But outside of that run here for this market, remember, like every trade we were calling out in these few weeks here was like every single trade from every morning meeting worked like so well. And outside of that, this market's been difficult, I think, ever since like July, honestly. So that's how market environments work. They kind of ebb and flow, and you need to know when to take a half step back. A half step back is not a full step back, but a half step back from trading aggressively. Which is why we do our big picture game plans every day. Today was a great day to trade very minimally. My volume today is extraordinarily low for my own typical average trading. And that's exactly what I wanted it to be. It's exactly what I said in the morning meeting. Looks like a really difficult day. We're opening in a tough spot. Less is more. Don't overtrade. So you want to keep very tight risk limits. If you're in a tough environment and your average room that you give yourself on a bet for a bad day is $500, and maybe you want to even cut that in half. That's what you want to think about. I think more is on the risk side. What limits can you make differently while still being involved, still learning, but not doing damage to yourself. All-time high on a closing basis, Chinggis. Yeah. So Friday was all-time high close for SPYs. I actually prefer to do what you're describing. I prefer to always count highs and lows to the pennies, but the way it's done officially, like if you're doing like market correction analysis or bear market analysis or anything like that, is always based on closing prints and not absolute prints. I prefer to do it on absolute prints myself. But, yeah, all-time high close on Friday. Scrolling through here. Yeah, just a comment from Steve. It might be the reason why the IWM is more representative of sentiment in the broader market. The SPYs and the Qs are dominated by strong big tech, and the IWM says we've been overbought. Oh, Rich, you're funny. All right, next here for a YouTube question from Mr. Trees. Would you short the IWM if it dropped below the range it's in? So that's another thing I was thinking about today, actually, Mr. Trees. I was analyzing the market for myself a little bit, and I'm still analyzing that question, right? What happens if Apple continues to sell to the IWM? And this is where I'm still a little scared about this market. Like, I've said this a number of times already in the last several weeks, so I'll repeat it. I'll repeat it again anyway. I look at some of these stocks that are down 50 to 85% from their highs on the years, and on the year, and sometimes even 50+% from their highs of November. And I really want to come in and dip buy. And if the S&P was down 18% and those stocks were down 75%, I'd be like, we are gotta be at the point where we are about to wash out. And the big thing that my mind and my own trading has been struggling with for a little while now has been basically kind of what your question alludes to, which is, if Apple and SPYs and Qs break down, is there any universe where those stocks that are down that much, or the IWM, which is in correction territory, are able to hold up? And at least right now, I think the answer in your mind has to be no, until and unless the market can prove otherwise. Because so far, every time that answer has been no. And then I think about, well, what the heck happens if this IWM loses this like 210 area support? Because then there's nothing to the left, right? Like, as much as this IWM is in a correction, it's in a correction following a breakout, not if you just take it from resistance on the year. And if Apple weakness just leads to broader selling in this entire marketplace, what are you looking at here for IWM? 170? What do these other stocks look like if the IWM is at 170? Oh my God. It's going to be crazy. It would be crazy. I'm not predicting this. I'm just saying that we need to always be prepared for all possibilities. So is the IWM a short on the break of the support zone? Well, the technical analysis answer to that question is yes, it is. The answer is yes, it is. We always want to see what things look like when they're breaking, what the level of extension is. Like, if it was breaking tomorrow, I wouldn't take that trade. It would be just ridiculously extended on the 4th, 5th day down. But if we break down here and then hold down here, and Apple selling off, and maybe IWM does try to be strong for 1 or 2 days above support, and then it can't handle it anymore, and it loses that support, and something becomes broad-based, then yeah, it could that would be a great short setup. But we'll see it as it comes. Cap Holmes asking about HNP. I don't know what this is, but it's way too gappy. Yeah, some sort of. There's no volume. There's no gap. You can't trade this. No problem, Sebastian. Thanks for the compliment. Mr. Steve, yeah, look at the sell-off. Oh, so that's I'm glad that you brought this up, Mr. Steve, because I wanted to bring up AMC and GameStop in the meeting today, and I didn't. So it seems like the bubble is totally burst in certain stocks, and I look at other things, and I think that the bubble hasn't. Right? Like, I've been saying, I've had a personal price target on my AMC short that I got out again on Friday. I got out, I think, on the 3rd, and then I reshorted it on the 8th, and then I got back out on Friday. And I'm a wimp. I'm a total wimp. Because when I was shorting this thing at 60, I said I'm holding it for my price target at 20. And I held it back. I held my short position all the way back from this $30 balance back to 52. Actually shorted more up here, and that was able to pay me, which was nice. But I held this thing back $25 just to wimp out $7 in front of my price target. So I'm a wimp. But $20 is my price target in AMC ever since I've been short since June. It has been a good trade for me, even if I am a wimp. And anyway, when I look at some of these stocks that are super beaten up, like that Viacom or that Alibaba or any of those spec names that we've been talking about, DKNG, Fubo, PayPal, Peloton, whatever. I can't help but also think about how ridiculously elevated AMC and GameStop are even at these prices. I've had a profit target of 20 because I thought that a profit target of 3 was ridiculous, but I really think AMC belongs at like 3 or 5. What is the value in AMC? No one goes to movie theaters. No one was going to movie theaters before COVID. And then these other companies like HBO is trying to destroy AMC. That's what I think. That's why they're releasing everything. Everything is direct to HBO now, or you can go to the movie theater. How much do you have to really want that movie theater experience to actually go to the movie theater? I'll tell you what, though. Downton Abbey 2? Probably going to go to the movie theater for that. Probably going to go to the movie theater for that for the first time since Downton Abbey 1. I'm not even kidding. But what is that? We go to the movies once every 5 years? AMC 500K squeeze is trending on Twitter. Yeah, they're desperate. They're trending it on Twitter because they got no money to be able to come in and buy the stock. Stock's down 16% on the day. And the company's not worth anything. It's not worth anything. I mean, honestly, GameStop at 150, I still think GameStop belongs at when it was here. I was making the argument in February 2021 after this pullback. Hey, you know what? Maybe this is where GameStop actually belongs. Maybe GameStop doesn't belong at $8 anymore. But, 40s, 50 seems reasonable to me. And then it had its next squeeze, and its next squeeze, and its next squeeze, and it's held up for the most part since then. So I still see pockets of stocks that are trading at prices that I just don't think are rational. Honestly, even the electric vehicle space. With Rivian. And by the way, I had a call out for the team in the morning meeting today for Rivian as a buy through 120. It's a technical trade. Doesn't mean I believe in it. Rivian, for the valuation that it hasn't even built any cars. It's a hope and a dream. It's Lucid. Honestly, even Tesla, which I know has gotten weaker, and I know it's like sacrilegious to be bearish fundamentally on Tesla. Or I guess you can be bearish fundamentally on Tesla as long as you don't act on it. But I still look at these companies, especially like AMC and GameStop, and think that the prices that they're trading at is ridiculous, and that how can we have a real bottom to speculation with these stocks still trading at these prices? But then I look at Bed Bath & Beyond, which has gotten hit for the last 2 days in a row because it's coupled with AMC and GameStop. Bed Bath & Beyond is already back to the price that it traded at before its first squeeze. Really. I remember when this news came out on the buyback, trading it short. I made money here on this. And then I learned more about what was new about the company, and I started being a long buyer instead of a short seller, and was able to make money both ways on this thing. But this is a real company with a real buyback. It's got cash on hand. That's trying to do things and think outside the box. It's trading at $16 a share. So I look at other things like that. Honestly, even this Viacom, which I'm not long, Viacom at $30 a share here. There's value to be had in some of these names. This market's all screwed up in some ways, I feel like. And even Apple, which I love the company, love so many things. I love everything about it. For Apple to do what it did over the course of the last 6 days, though, there's no news on Apple the last 5-6 days, really. I don't know. Whoever came up with the efficient market hypothesis should be taken out and shot, because that stuff is just not true. I remember when they tried to teach me that in college. Anyway, let me scroll back up into the VTF after that little rant. Where are the apes? I didn't even finish reading your question there, Steve. Yeah, where are the apes? Yeah, I don't know. I don't think they got anything left to buy. Next here from Andrew Sachs. Thoughts on Mara? I'm in puts in 66.50. Would have only closed around 40%. Nice trade. Chart looks brutal for downside, especially with the crypto weakness. Yeah. Yeah. First of all, great trade. This thing is another one that just didn't belong in here. And this is another one, we're still seeing these pockets of these stocks having these insane moves. I don't have very strong opinions on crypto, which I know everyone's got a very strong opinion on crypto. I don't. I own some as a buy and hold type of person. I will occasionally add to my positions in crypto itself. Again, I don't have, I believe that there's room for crypto, but maybe it's more like the .com bubble. There's no way all those coins can be worth something. And we're yet to see the coins that are really worth nothing go to zero. What happens to a stock like this in that case? I really don't know. You got big support here, though, as you start getting into the low 30s. So you're also 3 big down days in a row. I would consider here this week, if you can get some more selling into this upper 20s, low 30s areas, I would really consider starting to take some off. Because the other things that I'm thinking about, again, this is why this market's been so hard, is because you still got some things I think should go lower. And I would put Mara, honestly, closer to an AMC than I would to like a Peloton. Like I look at Peloton or DKNG or Viacom or Alibaba, and I think that the prices that they're trading at are ridiculous. I look at AMC and GameStop and some other names, Rivian, honestly some of these crypto names as well, and I think that they're ridiculous for the complete opposite reason. They're ridiculous because they're still at prices that are too high. One of the things I've been thinking about is just kind of seasonal stuff. Like I think that names that are beaten up have been further unable to catch a bid because of tax loss harvesting and because of insider selling, and I think that both of those factors are set to abate into the end of the year here, and possibly even at some point this week. Historically, in the month of December, and by the way, so far, the month of December this year has played out nothing like the average month in December, so you definitely take this with a big old grain of salt. But historically, December 15th approximately sees like a market low, and then we kind of rally into the end of the year, and then we have that Christmas Santa Claus rally thing. So with a stock like a Mara, or honestly even an AMC or a GameStop, or definitely like some of the ones I like a little bit better, like a Peloton or a DKNG, just based on the degree of the selling that's starting to come in, and based on those kind of seasonality factors, I think when you have extension of the downside in a Mara like this, if you can get a 4th day down, I really think you should be looking to book further profit on that. Because we're just we seem like we're approaching that time. So I hope that helps there. Andrew, next here from Tommy. I've been trading pure price action. Is there any other stuff you recommend to add to my tool belt? Order flow, time and sales, algo system, footprints, market profile. All right, so I guess from a so I'm not 100% sure if your question is saying that you want to expand outside of trading pure price action, or if you want to be even better at trading pure price action. I can tell you for myself, I believe in price action first and foremost. And that's how I can look at a company like Rivian, which I think is still crazy at these prices, and call out to the team here pre-market that I think that this could be a buy through 120. Because price action, and price action pays. Even AMC, which I think is worth $3, I said to the team earlier today that if this thing could see $20 tomorrow, or upper teens tomorrow, like in a very short period of time, so it's very extended down there, that there's a buy there. So price action is first and foremost for sure. I do like to incorporate other stuff into my trading. I describe myself as 85% technically focused, 85% price action focused, and 15% of what I call qualitative fundamentals, which is a very broad term to encompass option flow, to encompass, which you could argue is also technical, to encompass some aspects of the fundamentals of the company, the story, things like that. So is there anything that I would recommend that you add to your tool belt? Looking at the large institutional option flow, which I only started doing a couple years ago now, maybe 3 years ago, it has been a huge add-on to my personal trading over the course of the last several years. I don't think I would pay a lot of attention to time and sales at this point. It's just and I'm good at reading the tape. It's just not that important anymore. Algo system, it's a very broad term, so I don't really know, kind of what you mean by that. But yeah, if you want to expand your tool about a little bit, I would say some of those qualitative fundamentals and looking at option flow, looking at money flow broadly. A lot of the stuff that Pat, who is on vacation until Thursday, gets into his morning note each day for the team is the stuff that I would recommend that you look into. So if you're not part of the team, which it sounds like you're not, maybe you should reach out to the folks over at T3 Live and ask them about getting a Pro Desk membership so you can get more of the access to the stuff that Pat posts in here to the team on a day-to-day basis. It's super valuable. Russ giving us a link. Listen to Jeremy Grantham's description of how the dot-com crash at the turn of the century evolved. Okay, I'll check that out. I'm sure there's a number of ways in which that might go. And I don't know if that's a comment off my crypto comment, but that's kind of how I feel. Like, crypto might be a thing forever going forward. But is Shiba Coin going to be a thing forever going forward? I'd be willing to bet a few bucks that it won't. From Ben here, thoughts on Cube. Popped up on your Gap screener. This Cube's been in a really nice consolidation for a long time. It just needs to go. 55 bucks. Probably area between 55 and 56, actually. Have an alert out of 55, see what it looks like on the break. But maybe it might need to be as high as 56. Oh, it's a REIT? Yeah, I don't love actively trading REITs. I've got a REIT in my retirement account that I really like, in my personal account that I really like. For me, REITs are kind of just buy and hold investments if I have one that I like. Yes, Papa, I think AMC is the highest component of the IWM. Last I checked, it was anyway, which is nuts. I haven't seen Dune. It's one of those things where I kind of want to read the book before I see the movie. I've been watching Wheel of Time on Amazon Prime. I thought I'd watch a ton of TV. But I had read those books, actually, back in high school and college, and I'm super pumped about Wheel of Time on Amazon Prime. Anywho. Scrolling through here. The top analyst that came out with a $200 price target on Apple push it, another 10 bucks? Yeah, I guess so. I remember the last time I saw huge, consistent, absurdly big call-outs in Apple from the analyst community was at this peak here in 2012, which now looks like a blip on the radar. But this pullback, and this was when Apple was at like $1,000 stock, or not $1,000 stock. I think it hit above 700, so it was split adjusted at that time. But Apple pulled back from looks like $24 to $13. It almost went down 50% from its high of 2012 to its low of 2013. I remember its low of 2013, Apple, similar to certain other companies we've been looking at, almost seemed to have more cash on hand. I remember us looking at that, like Alibaba now. That's the one we've been looking at recently. It seemed like Apple had like more cash per share at that point, or almost as much cash per share as the stock was trading at. There's the rest of history for you. The Witcher. I saw The Witcher on Netflix. I feel like I just didn't know enough of the background enough to really appreciate it enough. VOY. I'm not getting anything for VOY, Alexis. Sorry. Prolific Lou asking about Apple. I mean, we spoke about Apple almost the entire meeting. I don't really have anything else to say about it. No problem, Tommy. Love you too. Beyond Meat got upgraded here after hours. Beyond Meat, another one of those lower lows, upgraded after hours. Must have been a big upgrade. It's up 6% here. Oh, yes, Brent. That's supposed to be coming on soon. That's supposed to be getting fixed soon. It's a long story. I'm not going to get into the long story of it, but I think that's going to be fixed for you soon. I actually have to do one more thing on my end after that meeting, which I haven't had the time to do yet. So I'll try to get it done soon, and then I think there should be 1 or 2 more classes that get added for you. All right, gang. 5 o'clock. I think we talked about everything we need to talk about. Purple warning. That's got to be crushing it. I can only imagine. Yeah. Oh my God. This is a garbage company. Garbage companies deserve to be down. What do you want me to tell you? I think Purple like loses money for every mattress that they sell. Anyway. All right, everybody. Yeah. Maybe they should nominate me for a Nobel. All right, guys. Have a great night. See you, everybody.